Well, folks, you gotta be flipping my flapjacks here today for the first time ever. I was not expecting this, but the public account just closed over $2 million for the first time ever. $2,005,000. Absolutely extraordinary. The journey this account has been on is just a crazy one nonetheless. We started this account a little over 4 years ago, and this was started in my private stock group, and every single trade in the history of this account has been documented. Every single buy order, every single sell order, every single deposit, everything has been documented in the history of this account. And here we are today, over $2 million. And I wanted to go ahead and do a video on kind of 7 secrets I have that hopefully, if you're looking to scale your stock market portfolio over time, whether that's to 50K or 100K or 200K or 2 mil or whatever the number is, right? That I can kind of give you guys some game out there on exactly how to kind of execute scaling a portfolio to much bigger numbers in some of the ways I've done it over time, not just with this portfolio, but other portfolios as well. And if you didn't know, this is absolutely a big portfolio that matters to me now because it's grown to such a big amount. Obviously, I have my main, big dog account, right, the private account. But this one, it's been so fun to literally document this entire process with everybody in the private stock group, every single move we've ever made, and I've even documented a lot of the moves on YouTube as well, and it's been extraordinary to do this. As of right now, just on the current position, this does not account for any profits taken or dividends received over time. Just on current positions, we're up over 1.2 mil, with obviously our shining star being $800,000 plus gain in Tesla Maesla. But you look and we got a lot of home runs. Cruisy Doozy's a home run. Elf Beauty's a grand slam. Facebook's a home run. Planet is something like a multi-home run, right? Revolve is a grand slam. Skyworks is a home run. Tesla Maesla is like Barry Bonds when he was on the stuff, man. And Upwork's one of those that's approaching a grand slam there. And so very, very thankful. But anyways, I got some game to give out to you guys here today. Hope you enjoy this. All I ask in return is that you smash that like button. That's literally it, guys. I appreciate you being here, and I hope you appreciate me giving you some pointers and tips out and things like that. By the way, it's almost a year ago today, that this account actually hit $1 million. And so to hit 2 mil now is crazy, and especially the fact that I've hardly deposited any money in this account in the past 9+ months, right? Because I have a bull, and that bull is very hungry, if you know what I'm talking about, okay? The Hungry Bull, download it on your iOS and Android store because that bull is very hungry. And so all my money's pretty much been going over to the dang bull lately. And so yeah, I mean, to go from 1 mil to 2 mil with very little deposits is definitely something I'm thankful for. So 7 secrets here on scaling up a portfolio, okay, that I would give you. First one is, I got to say, and this one's specific with the public account, is accountability, guys. This is massive, massive, massive. I never realized how important this was going to be in the end for me in regards to this portfolio. But accountability, so the fact that every single move is documented in this account is absolutely massive. Because here's the thing. If I buy out of any stock or sell out of any stock in that portfolio, I'm going to have thousands of members in the private group wanting explanations from me on why I just did that. Why'd you sell out of that stock? Why'd you buy this stock, right? And so every single move I ever make in that account has to be so thought through, right? I have to think about this from every angle and make sure I'm absolutely making the right decision because I'm accountable to everybody that's in the private stock group. They're going to see the move, they're going to know of the move, and they're all going to want to know, right? And so this has been an absolute game changer for me because usually when you run a portfolio, you're the only one that usually has access to that. And so it is so easy to make buy and sell decisions that are kind of more emotion driven. Like sometimes you just wake up and you're kind of feeling like, man, I want to make a move in the market. Let me just, do this. This stock, it's also going up. So let me jump in that one. Or you're much more likely, if you're not accountable to anybody, you're much more likely to make what I would call questionable decisions, right? Questionable decisions if you're not accountable to anybody. And so I would say actually, and this is a massive, massive thing, that's why I wanted to put it as the first one of these secrets, is I would make your stock market account a place where you can, other folks can view it that might care about it. It might be your close friends. It might be your family members, somebody like that, where it's not just you looking at your portfolio, because if you have other people that care, and they got to truly care, right? If they don't care, then there's no point in letting somebody else see what your moves you're making and things like that. But if you got people that actually care and actually want to hear your reasoning behind it, you start to think through these decisions so much more. You start to really think like, dang, should I really just sell this stock here today? Should I really go buy this stock? Because like I said, when you're just you running your portfolio, it's so easy to make those decisions, right? And if you all of a sudden have people that care and they want explanations on why did you just make this move, now all of a sudden you got that accountability, and it's going to likely make you make much better decisions than if you're just running your own race, okay? I never really realized how big that was until I got into YouTube and specifically starting the public account, right? So that's the first one up here. Number 2, opportunistic deposits. So over the past, let's say most of this year, 2021, I've hardly deposited any money into this account, right? But the account's up to big levels now that, if I deposit $3,000 into the account or $5,000, that's just not moving anything, right? It's now up to a place where it's over $2 million. Like the amount of money that is coming in is just a very, very minuscule amount. But I will say, and this is extremely important, is when you are in your first 2 or 3 years of building up a portfolio, the deposits are absolutely key. And making those opportunistic deposits, meaning if you have a stock that goes down, being able to deposit some money in. And this is why the most important thing when it comes to a solid investment strategy, in my opinion, is before you ever get into the stocks and trying to find the best stocks possible, is making sure your income and expenses are in a good place, right? Where you have money to funnel into your portfolio, let's say every 2 weeks or something like that, right? It doesn't have to be a game changer. You don't have to deposit $10,000 every 2 weeks, something like that. It could be $200 every 2 weeks. It could be $100. It could be $300, right? But as long as you have that money that is ready, you're ready to go into your portfolio. If the market dips and stocks dip, you can take advantage of deals in the market. The opportunistic deposits are everything, especially in the first few years. Because here's the thing. How are you ever going to scale a portfolio if you have no money in your portfolio, right? In those first few years, it's all about making those deposits and then hopefully making more deposits, right? Getting the gains on those. And as you build the numbers bigger and bigger, the deposits become less important. And then it becomes more important to have big winning stocks, right? Because, let's say I sold out all my Tesla stock, $910,000, right? Whatever I would put that $910,000 into would be extremely important. That would be a game changer for my portfolio. And if that 910 all of a sudden went down to 400, or that 910 became 3 mil, right? That's what really matters. A $2,000 deposit or $1,000 or $3,000 or even $5,000, that's not changing the game for that, okay? So your first few years, you got to understand, get your income right, get your expenses right. If you don't have your income and expenses right, this, investing is going to be a hard game to be ultra successful at. You can still be decent at it, but this is not trying to day trade in and out of stocks or something like that. Making investments, you're going to build up those first few years from your deposits and then getting the gains on top of those, okay? That's the second one. Third and fourth one, right? Third one, I focus this account a lot around growth stocks. Let's look at all stocks that are up 200% plus, and let's ask ourselves, is this a value stock or a growth stock, okay? So ELF on a shelf, 355% gain. I got into ELF stock when that was a stock that was a beaten down dog stock. Everybody had forgotten about that stock. I was buying at $7-8 a share, and they grew the company. They grew revenues. They got the business back on the right track, and 355%, right? And we've taken a ton of profits out of ELF over the past few years. Needless to say, some of it I wish we didn't take because it's done really well, right? Let's see next one up here, the Planet, right? Huge growth company, over 200% gain for us in regards to the Planet. Massive, massive growth, right? Revolve, 541% gain. Huge growth company, right? Very, very exciting growth story over the coming years for that one. Tesla our best stock of the bunch, right? 2,500% gain. Tesla story is all around growth, right? Upwork, 264% gain, all around growth, right? And so you look at all our biggest gainers, all the ones that are up 200% plus, all growth stocks, right? So this doesn't mean I won't buy some value stocks and buy some dividend stocks, because you see there's a lot of what I would call quote unquote value stocks, and there's some dividend stocks in here as well. And those stocks are doing really well for us. They're just not doing as well as the growth stocks, right? Now, keep in mind, if we're in a down market, the value stocks and divs will likely hold better than growth stocks, okay? And this is why it's very important to implement a strategy, in my opinion, where you're taking advantage of growth stocks, value stocks, and dividend stocks. I call it the GVD. If you've never seen my video on the GVD 1, 2, 3 strategy, watch that at some point in time. You could type into YouTube GVD123. Check that video out maybe after this one's over. That one gives a lot of pointers and tips on how I implement that strategy out there, okay? So growth stocks, absolutely important. Number 4, the 4th secret. I don't take money out of the portfolio. I don't take money out of the account to go do something like this and do something like that. The only reason I would ever take money out of this portfolio is if I sold a stock and I have to pay a bunch of tax on that. So let's say I sold half my Tesla shares, right? And all of a sudden I have a big fat tax bill. I would take some money out to pay the taxes on those gains that I had in Tesla stock, right? Or any stock for that matter, right? If there's any meaningful amount, I'll take money out to pay the taxes on. And, if I have some of those positions in 2022 that I take some big gains on, which is definitely a possibility, I'll go ahead and I'll take some money out to pay taxes. But outside of that, it's not like I take money out of this account and I'm like, I'm going to go buy this with it. I'm going to go buy that with it, right? No, I don't do that. And I think that's something that everybody needs to employ. Like if you're going to, scale your portfolio, don't take money out of your portfolio to go buy stuff with it. I understand, if you've built it up to such levels that you want to retire and now you're going to live off your portfolio, I can understand that. But outside of that scenario, why? It's like imagine, here's the way I view it, okay? Building up a portfolio is very similar to building a house, right? And so imagine you're building a house and you lay the foundation, you get all the concrete slab in, right? And you're building the walls and you get the electrical in. And next thing you know, you start just, taking wood apart. It's just like, what are you doing? You're trying to build a house here. Like, why are you taking stuff out of the house now? And you're like, oh, let me rip this electrical out now. Oh, you know what? Let's break up this slab that we poured here. It doesn't make any sense, right? But when people start building up a stock portfolio, they start all of a sudden taking money out 2 years in, 4 years in, 6 years in. And it's like, dude, you're building this beautiful house. Why take money out now? Unless it's an emergency. And keep in mind, you shouldn't be taking money out of a portfolio if it's an emergency. Usually you should have what's called an emergency fund around for that, right? Where it's money that is quote unquote untouchable money unless you get into a real bind and you get into an emergency situation. You should also always be keeping 10 to 30% of your money around in cash and cash equivalents, right? Could mean money in savings accounts, something like that, right? That is money you can at least get to if you have something like that. So you shouldn't ever be in a reason that outside of paying a big tax bill because you sold a stock in that portfolio to get a big gain, outside of that scenario, you shouldn't ever be taking money out of your portfolio overall. And that's something I haven't done in this portfolio, and that's one of the reasons, one of many reasons why we're at $2 million now in this portfolio, okay? Very important there, number 3 and number 4. In terms of number 4 and number 5, I let the boys run. I let these stocks run. Something I learned over the years, oh man, the amount of times in my first, 4, 5, 6 years of investing in the market that I would invest into a stock that I thought had an incredible future, and it would start running a little bit, and I would cash the profit like that. I have so many of those stories, it's absolutely ridiculous that a stock would get me a 15% gain, a 30% gain, a 50% gain. I'd be like, cash, cash, cash. And it's like, if you're in the type of stocks that you think are double, triple, quadruple, 5x type opportunities over the next 5, 10 years, right? You gotta let those babies run. You gotta let them run. And if you don't let them run, usually you're making a big, huge mistake, right? And so early on in my investing career, I would get a gain on stock and I would be so quick to take that profit. And then what I would do is I would, invest some money into a next stock, right? And I would watch that last stock just run and run and run and run. And I'd be like, wow, awesome. I took my 28% gain in that stock. And then it just ran another 75% after that, right? And I'm just like, what am I doing? Right? You gotta let the boys run. I can tell you, if you're in game-changing stocks, you gotta let them run. There's nothing wrong with eventually taking a profit in a stock, right? But you got to keep in mind, like, if you're in these stocks that have huge potential to take, I could have took Tesla when it made me my first 20. Like, remember, Tesla was a stock that didn't make me anything for a year. I was in the stock and it did nothing for a year, right? In terms of when I started buying that stock to, obviously, when it started actually making me money, right? And when it came to Tesla, there was a stock that, after it's finally started making a run and it made its first 40% move, 60% move, it could have been very easy for me to take a profit then, right? Be like, I'm cashing out. Yeah, probably wouldn't have been the best decision because we obviously know where that stock, and that goes for all this. Revolve, I could have, Revolve was a stock, when I was buying that stock, it was $11.86. I'm like, this is a joke price. I think this is going to be a $30, $40, $50 stock in the future, right? I could have made my first, little bit of money on that and just cashed, right? I obviously didn't do that. I let that baby run. So you gotta let the boys run. If you're in great stocks, man, they have a long way to run, and don't be so quick to take that profit, okay? Number 6 is around taking a profit, and here's what I do in regards to taking a profit. I only take a profit in a stock if I feel there is a better opportunity out there in the market for me to, that presents itself, right? Here's the thing, guys. I don't just take a profit to take a profit. Just because a stock has went up 20%, 40%, 100%, 200% for that matter, it doesn't mean a lot. I've got to relook at the company's valuation since I invested into it and where the company's at that particular time, right? Because these stories do change, right? For instance, Tesla, Tesla a few years ago for $1 trillion definitely would have been like, that's ridiculous. That's a stupid price for Tesla. That's just inconceivable, right? But then I look at where Tesla's, bottom line's gone, their net income, and I'm like, oh my gosh, is it possible Tesla does $10 billion of net income on the bottom line next year? Maybe it's an actual realistic possibility. So these stories change and they adapt over time. So you got to look at where the company's current valuation is versus where that company's currently at. Not necessarily where you bought it at and what your expectations were at that time. Because these stories change, especially if you're in a stock 2 years, 4 years, 6 years, the story's going to change. It's going to likely be a lot better or a lot worse than what you thought. And I can tell you, most stocks I've been in over time, the stories were either better than I thought they were going to be or worse than I thought they were going to be. It's very rare that everything is exactly how I thought it was going to be. Usually it's either a little better or a little worse, okay? So only take profits if you have somewhere to put the dang money. Sometimes people, once again, are rushed to take a profit. And it's like, okay, you took a profit. You sold out of stock. Let's say you sell $10,000 of a stock, right? Where's the 10K going? Do you have a plan for that? Well, no. It's like, okay, you got to have a place for the money. And you also can't be afraid to make a tough decision. So sometimes you're going to feel like there's a better place for your money, right? I remember several years ago, I covered on the channel one day, I sold out of my Apple stock. I made a really nice gain on it. I sold out of that stock. And that was a hard decision because I was still a believer in Apple. It's just, I put that money in Tesla stock and I felt like that was a better place for me to put my money at that time. And it was a hard decision, right? Because I'm like, I like Tesla, I like Apple, right? I just like Tesla a lot more. And I think Tesla's going to way outperform Apple over the coming years, right? And so sometimes you have to make those hard decisions. You can't be afraid to make those hard decisions, but just make sure if you're going to take a profit, you got somewhere to put that dang money that you feel is going to be a much better ROI for your money overall, okay? And that's number 6 there. Number 7 up here. Don't get complacent. There's something I am unfortunate I haven't done is I haven't gotten complacent. And when you start to reach bigger and bigger amounts of money, it starts to become more and more easy to get complacent, right? Once you got 5 mil, 10 mil, 15 mil, it starts to you start to kind of think, well, man, maybe I'll just chill out. Well, something I'm fortunate is I have not gotten complacent. I'm still the guy that's up at 2 a.m. listening to earnings calls. If you're in the private group, sometimes you see me post, it'll be like 2 something in the morning, right? And listen to earnings call, like half falling asleep, right? I haven't gotten complacent. I'm still putting in the research work and I'm still grinding like I'm trying to get to my first mill or something like that, right? And so I think that's very, very important. You can't get complacent. If you get complacent, what's going to end up happening, you're going to likely start making bad decisions. Your accounts will over time it's just the way life is, man. The more work you put in, the more you're going to get out, right? And the less work you put in, the more you're going to, more than likely not succeed, right? So I'm still the guy that's reading through SEC reports. I'm still the guy that's up, late at night listening to earnings calls. I'm still the guy keeping an eye on all the earnings that my stocks report, right? And I'm still doing all these things. And I'm still the guy that's actively looking for the next one. I'm looking for my next Revolve stock. I'm looking for my next Tesla stock. I'm looking for my next Upwork stock. I'm looking for my next Elf beauty stock, right? Elf on a shelf. I'm looking for the next, all of these sorts of stocks that are going to be those ones that over the coming years get me that 300% gain, that 200% gain, that 500% gain, that 2,000% gain. And we look back and we're like, wow, didn't that one turn? I'm still that guy that's out here looking for it even after all the success, right? And so that's been a big factor for me. And so that's the only other last advice I can give you guys is, when you're on this grind, stay hungry, stay working, stay busy. That's all I can say about that, guys, because otherwise you know what happens, the rest of it, okay? Hope you guys enjoyed this video. Hope you enjoyed me kind of giving you these tips and pointers out there on how to scale your portfolio. I appreciate you guys joining me. As always, all asking returns that you smash the thumbs up button. That's literally it, guys. And if you don't mind, download the Hungry Ball. Use it. It's a beast, okay? It's a way to track your stocks, cryptos, keep up with what's going on in the markets, look at your financials of your stocks, news, earnings calls, SEC reports. You can do it all right inside the app. Keep up with news in relation to the market, plus so much more. Appreciate you guys. As always, much love, and have a great day.